All right, what's going on, folks? Welcome to the live NVIDIA earnings set to come out at 4:20 p.m. Eastern Standard Time. So we're going to have about 30 minutes to talk through general market moves here, general ideas, sector, industry strength, etc. If you're new to the material, welcome. We focus on three overarching ideas: trend, relative strength, and momentum. Everything we do is based off of price and those three non-negotiables. So obviously the big thing here, joining me is our co-host Mike. Mike, thanks so much for joining. The market has set itself up for a rally into the NVIDIA earnings off the April 7th low. Markets themselves are up massively. NVIDIA is up over 50% off of the low on April 7th. But one thing I want to point out here is the idea that off of the January high, January 7th, down to the April 7th low, so approximately a 4-month move, NVIDIA lost nearly 45% of its market cap, 43.5%. Normally what we see in those types of environments is a bottom and then the next beginning of the big next leg up. It's not something you normally see roll back over. This is the equivalent of a cyclical bear market drawdown, a 43 to 45% move. I think 2022, which was particularly devastating, saw a 70 or 75% reduction in market cap. This was the largest stock in the world on January 7th. And it lost 45% of its market cap over 4 months. It's hard for me to rationalize that NVIDIA, after bouncing 50% off the April 7th low, that the market is not fully expecting NVIDIA to potentially be back at all-time highs. I don't know if it happens tomorrow, but relatively soon. Mike, what do you think? Does that generally make sense? Or are we looking for a bigger move to the downside?
Yeah, well, thanks for the invitation to join you on live here, Ham. Yeah, that makes complete sense to me. If you look at it even at a smaller time frame here, we got NVIDIA showing a little flag here. So it looks like we're going to have bullish sentiment coming in.
I mean, semiconductors, we can look at it really quick. If we pull up like Koyfin or something, and we go and we look at those April 7th lows, I've been sending out a lot of either tweets or newsletters. I've been talking about the performance off the April 7th lows. I think is super important because the April 7th low to me is the market bottoming and the potential next leg up. I mean, if you're thinking about this from a market cycle standpoint, the market fell damn near 20%. So if you're in the mindset that whether you want to call it the fastest bear market of all time, or just a very aggressive correction, either way, the April 7th bottom has marked a low over the last 6 weeks. You cannot, nobody can fight that. If you fought the rally over the last 6 weeks, you're a loser. Now, whether or not we break back out to all-time highs or we, round trip back down towards the April 7th lows and potentially even break it, you can make the argument. I would argue we don't do that. I argue that we're, to me, clearly on a path to higher highs and to all-time highs relatively soon. But it's worth the argument to have. Could we potentially round trip and end up back down at the April 7th lows? One thing that I think is pertinent to look at is if the market was in that mentality that we were going to come back down and retest those April 7th lows, that we would see defensively positioned sectors and lower volatility areas outperform. We would be looking at things like healthcare, energy, potentially materials. We'd be looking at late stage cyclical bull market sectors outperforming, and we're not seeing that at all. We're seeing tech, industrials, consumer discretionary, and communications, the four arguably most risk-on areas of the market, outperform. And so to me, that's not screaming that the market is afraid that the April 7th lows are coming back in whatsoever. It looks to me that larger financial institutions, I love people are fucking arguing on Twitter right now that only retail is buying Palantir. I'm like, retail's not pushing Palantir when it's what's the market cap right now on Palantir? $293 billion company, folks. Like your boy next door betting $50 in his Robinhood account is not pushing Palantir. It's financial institution accumulation pushing things like this to the upside. And we get that, and we can see that through sector rotation. So I'm leaning on this a lot. I think that tech is leading for a reason. I think tech was the most unloved sector going back a year. We peaked back in June or July. Tech hasn't done anything. Tech led the market to the downside in February. Tech has bounced the most since the April 7th low. And now we're in a prime position to potentially attack all-time highs in tech. And I don't think there's a more important stock in the tech space right now than NVIDIA. So putting this all together, which is, what I like to do, build that bigger picture first, it's hard for me to assume the market's going to retest those April 7th lows. I think NVIDIA does provide a catalyst for the market to go higher. I don't know if it'll happen today after hours, but it's there, right?
Yeah, I mean, today would be the exact catalyst that we would need to push everything into all-time highs, especially with NVIDIA here, the tail end of all earnings. If NVIDIA goes up, SMH will go up, and that will bring the Qs up. So it makes sense.
It does. It doesn't mean that it has to happen, but logically it makes sense. There's a reason why the tech sector has been bought the most. There's a reason why, and once again, if you're watching the live stream here, it's not my opinion. Tech literally has outperformed every other sector in the market. And then we can go and we can look at, from an industry standpoint, going back to the April 7th lows as well, from an industry standpoint, as you said, the semiconductor space is the best performing off those April 7th lows. There's a reason why this is happening, and it's generally not because financial institutions are afraid that these are going to round trip. It's generally because they want to be positioned for higher prices. So now we're in a market where semis are leading the industry groups and tech is leading the sectors. We've gone through a majority of the earnings reports. As Mike pointed out, NVIDIA is kind of the last one that's going to wrap this up. And so, there is definitely an opportunity here for NVIDIA to really push this entire group, this sector higher. And to take it one step further, I think that, if NVIDIA, the market likes NVIDIA if it does. I don't know if it will. But if it does, it will arguably pull tech up into all-time highs, which we haven't been able to sustainably rally higher since the June or July high of 2024. If that happens and tech breaks out into all-time highs within the next coming days or weeks, the Qs are going to respond positively. 50% of the NASDAQ is the tech sector. And if the Qs are pulled up higher just by waiting, we're going to pull the S&P 500 up higher. And if that's the case, I think that a lot of the money sitting on the sidelines, which has been a big argument over the last couple of weeks, look how much money is sitting on the sidelines, how much dry powder is yet to be pushed into the market. I think people are going to be forced to buy at higher prices, and kind of this positive feedback loop where higher prices attract more capital results in higher prices. So I think that NVIDIA could be the catalyst to do that. Once again, at least inside of TTI, I don't have any goddamn idea what's going to happen for earnings. I don't know. And I don't place any bets pretending that I do know. I just know that we're trending higher over the last 6 weeks. And a lot of the supporting evidence is suggesting that financial institutions are not necessarily afraid to own this higher beta stuff, particularly tech and semiconductors, which is a change because they have not wanted to own this with size for almost a year. So that's where I'm at. Anything to add there, Mike?
I was just looking at Dow Jones as well. It's kind of gotten hit with UNH, but NVIDIA, I was just confirming NVIDIA was added to the Dow Jones, and it also propped out the Dow up as well. So there's a lot of good reasons for NVIDIA to.
The craziest part about the Dow to me is the fact that United Health was the largest component for over a year. I think Goldman Sachs recently took it over, or I should say Goldman Sachs took it over before the recent tumble in UNH. But UNH is still a part of the Dow, and the Dow is holding above now an upward sloping 200-day moving average again after reclaiming it, and that's on United Health, which at one point was the largest component, currently down over 50%. So isn't that crazy, the resilience in the Dow? I know the Dow was underperforming the NASDAQ and the S&P 500, and I get it. There's like a reason to want to look at that, and bears are going to look at the Dow and say, listen, we're dancing the 200-day moving average. There's not a lot of room to fall here in the Dow before we potentially flip back down into a downtrend. But my caveat is United Health sucks. The Dow has not yet shifted it out, and yet we're still above a 200-day moving average. I think that goes to tell you that the other 29 components are relatively strong, right?
Yeah, exactly right. Yeah, NVIDIA should help prop this guy back up as well. So
we'll see, right?
Very interested to see.
As you said, I think semiconductors here. If semiconductors go, I think tech goes. I think if tech goes, the market goes. But that's a lot of ifs. Once again, I don't know exactly what's going to happen. What I do know, though, is we've been trading semiconductors now for the last 3 weeks. We found ourselves in an AEVA trade relatively early, which is awesome to see that it's on. We bought the $8 area breakout. This was a small cap semiconductor name as we bought it. We caught the breakout here and it turned into 1,000% run. But the reason why I'm bringing it up is if semiconductors were, if the financial institutions didn't want to own semiconductors, I can't imagine things like EVA would have taken off in the way that it did on top of semiconductor flow, right? It's not just like a shitcoin pump, a small cap pump where EVA is kind of like singled out. It was semiconductors as a whole, and we're seeing, if you think about like a risk curve, the smaller the market caps arguably are going to be further out on the risk curve. You're seeing like, isn't technically a micro cap, but I don't remember what it was when we owned this. What was the market cap? Anybody in Discord, feel free to let me know. I think it was like 250, 300 million. I mean, it was not a big company when we first bought this at $8. So to see the market cap go from like 250 to 1 billion basically in a couple of sessions does not scream retail is buying. It screams financial institutions are buying. For some reason, AEVA, something changed in the company sentiment and everybody wanted to own it. But it wasn't just that, right? We currently own a bunch of CoreWeave as well. We bought the CoreWeave trade at 55. This is another 1,000% winner. But what I'm trying to do here is not necessarily point out trades that we've won, but point out the fact that semiconductors in general have been performing relatively well over the last couple of weeks. So it's not just an NVIDIA story. It's the entire industry group. And we said this last earnings report as well, and I think it's just as true now as it was then. Is there an industry group that's more important right now in the world than semiconductors? I don't think so.
Have you heard about this whole thing with deregulation and being good for small caps?
In what regard?
I'm not sure. That's why I was asking, because I've heard this argument that the Trump administration administering deregulation in the economy or in industry sectors or whatever, and those are all really good catalysts for the small and micro caps, especially in tech.
Yeah, I mean, deregulation is got to be viewed like across the board inherently as bullish. The less constraints, the better, particularly for capital. I haven't read anything particularly on small micro caps, if there is anything in there, but I will say, just because I want to say this, the R2K, a lot of people put a lot of emphasis on the Russell 2000 IWM. We look at it more as a risk puzzle piece, not necessarily as a guiding indicator for anything. For example, when small caps start to run, we know we got to be in them because they provide some great trading opportunities when they're running and liquidity is pumping into them. But one thing to consider, folks, that the R2K is built to house the shittiest stocks in the market on purpose. And then as soon as they get strong enough to move, they leave the R2K. And then another shit stock rotates in. So it's not a big head scratcher to see the R2K underperform, even in a raging bull market, because by design, they're built to house the shittiest stocks, the shittiest companies. And as soon as those companies start to prove to the rest of the market that, hey, we're actually not that bad, they graduate from the R2K. They go to MDY or some other mid-cap ETF, right? So it's like, don't look at a struggling IWM as like a bearish principle in of itself. It's just a piece of the larger puzzle. In terms of deregulation, you have to assume that's going to be bullish. But I think when we're done with this stream, I want to figure that out because, yeah, I think that could usher in a nice little golden age for small caps. And speaking of ushering in a golden age for small caps, what about IWM and their seasonality, where from November through the end of February, historically we have this fantastic rally in small caps, and in what we got this year was the exact opposite. We peaked in November 25th and we bottomed in April, and the R2K is still yet to even break back up and over its 200 moving average, losing 30% of its market cap. So not only did we not follow seasonal trend whatsoever, but I mean, it still hasn't recovered. So yeah, small caps might need that deregulation. Question really quick: is Bitcoin going to follow NVIDIA? What do you think, Mike?
I feel like there's, I guess from the macro sense, yeah, it should, because it's a proxy for the Qs, right? But I think if you look at it as a more micro scale, before there was a lot of mining going on, which sold a lot of GPUs. I think mining is pretty much dead from a retail standpoint, right? I think unless you have an ASIC that's actually dedicated to mining specific coins, personal GPU utilization for mining is kind of gone. So I think NVIDIA is completely disconnected from Bitcoin at this point.
I think it was part of their growth story back in 2017, 2018 for sure. I mean, anybody that was involved in any sort of like computer gaming, anything, you're playing games, 7, 8 years ago, you know how crazy the video card market was. You were buying used cards with hundreds of hours on them for mining for 2 or 3x what a new one would cost. Still, it was insane. But yeah, I think that they probably wound that down. From a trading standpoint, as you alluded to, Bitcoin is an extension of the NASDAQ. At least it trades that way. There's a high correlation. There has been a little bit of a decoupling effect over the last couple of months here, with Bitcoin showing a hell of a lot of relative strength as opposed to the NASDAQ. We had that 10 or 20% correction from February to April, and Bitcoin went sideways, which is relative strength, folks. That's the stuff you want to own when the market starts to swing back up. And we are starting to see Bitcoin outperform. We're obviously hovering around all-time highs right now. I do think that if the NASDAQ breaks out to all-time highs, it's only going to be a net positive for Bitcoin. From a pure liquidity standpoint, liquidity is going to rush into the market. It permeates through, and that liquidity will eventually find itself further out onto the risk scale. In my book, there's no riskier asset class to have capital in right now than crypto, and I'm not going to fight anybody over that. But from a pure technical understanding of risk and liquidity, I would assume the crypto space is going to be the max risk area. So as liquidity permeates through the market with an all-time high breakout in the NASDAQ, Bitcoin should positively pop on that. And we'll probably see that in two functions. Bitcoin's price and the total crypto market cap will probably break out to all-time highs as well. But if it doesn't do well, for whatever reason, the market sells NVIDIA off aggressively, and that translates into a multi-day run to the downside in the Qs, I would assume that Bitcoin will be negatively impacted. I don't think it'll be outside of the realm to see Bitcoin retest like 105 or 100,000 on a pullback in that event. I think the bigger picture, though, is particularly with Bitcoin, what does the primary trend continue to say? We've been saying inside of TTI since October of 2023, higher prices are going to continue. That's been the general call since then, even as we consolidated sideways and then broke down in late November, early December. We continued to say, there's no reason to be afraid until we're below 70K. We never got there. We added in above 90K. I think purely TA, just price, primary trends are up. I think it's stupid to expect Bitcoin not to continue higher over the medium to long term here. I think this secular bull market started on the breakout above 70K in November, and I know the Bitcoin and crypto market moves faster than the TradFi market, but by no means do I think the secular bull market in Bitcoin is over. I do think, though, that people have TikTok brain rot and they get bored too quickly, and they want to short boredom, which is the wrong thing to do if you want to actually make money in this market. So somebody posted a really interesting table in the Discord earlier today, which I thought was awesome, and it was the largest holders of Bitcoin by market cap, or the number of coins that they owned or something. And there was countries, United States and China was on it, but there's also BlackRock and a bunch of different US ETF providers. And then obviously you have MicroStrategy as well. But the number of Bitcoin held by United States ETF issuers is greater than any other entity on the planet, which essentially means the United States owns the majority of Bitcoin, and what's going to happen here. And that blows my mind, because just a couple of years ago, they were still arguing over whether or not Bitcoin was considered an asset. And now look what happened. US ETFs own the lion's share of it. So wild. That caught me off guard.
Do you think gold's dead now?
No, I don't think gold's dead. Gold is another play on liquidity in my mind. I'm not married to the trade like every other person that's 40 or older. I'm not there yet, but if you're a gold bug, you're a gold bug. You're going to die on that hill. And I think that there's times to own gold and times not to own gold. I don't try to predict those market cycles, but I do know that gold is just like Bitcoin in that it's liquidity sensitive. And we saw the breakout in March of 2024. We've had a beautiful advance. We've owned gold the entire time since I'm telling you guys that are watching the stream here, you don't have to predict this stuff. You just have to buy the breakout over a horizontal level indicating all-time highs, and then sit in the goddamn position and don't sell early. Give the market a reason to sell. But I think gold, this is a secular breakout, just like Bitcoin in October of 2023. Gold broke out in a secular bull market in March of 2024. I don't see any reason why, as long as liquidity is still entering the market, to get out of gold or expect this breakout in gold to not continue to be attractive from a trading standpoint.
The only reason I bring it up is it's starting to make lower highs here. So,
so the cool thing is we did trim our exposure. We don't do this very often, but we did trim our exposure on the literal day it peaked. We had the conversation, is this a blow off the top in the short term? And we were like, let's close a significant portion of the gold. And to a lesser extent, our gold miners positions, which were up huge, AEM and KGC. So we did time that perfectly. But now we're having this internal conversation of should we reposition ourselves back into gold here? And as you're saying, we are hitting some lower highs here. To me, this is a consolidation fractal around a previous point of contention at this 3,200 level. It reminds me of, if I pull up GLD, which is the actual thing that we've traded here, we added into multiple consolidation fractals, and I think we're going to do the same thing here. I think that's, you can see the play here because I didn't delete it. So there's some alpha. Some January 16th 350 calls. I don't think it's a bad idea to throw those on the book and kind of tuck them away and forget for the rest of the year. I do think that gold continues to break out along as liquidity enters the market. And by the way, if you're interested in this liquidity idea, there's nobody better in the game than Capital Wars over on Twitter. Incredible guy that focuses entirely on this concept of global liquidity. And I think that global liquidity, the more that I read about it, the more it becomes more important to me as a technical trader, because once again, it's not predicting anything. We can see, quantify and see the effects of global liquidity entering and leaving the market on particularly higher risk assets. And liquidity is entering the market. the Bank of, PBOC or whatever, the Bank of China is throwing liquidity into the market, like hand over feet. And that obviously is going to permeate its way through the global financial system into different assets. And what do they want to own? It's generally not U.S. stocks, gold and Bitcoin and whatever else they can get their hands on. So I think this is a viable opportunity in gold. I don't think it's over by any means. Silver, on the other hand, sucks. Silver sucks.
Well, yeah, there's the sign to every coin, right? Like Wolf Speed is a semi that looks like they actually declared bankruptcy.
They did, yeah. Shout out Kevin, by the way.
Did he call that out too?
I think a couple years ago, he was like, we had a conversation about should we be looking to short Wolf Speed as it broke down below like 70 or 65 or something. And he was like, Wolf Speed sucks. It's going to be out of business soon. And we were like, all right, yeah, whatever. Well, you called it. It's now out of business.
Wow. Yeah, so not every semi is going to catch the momentum.
No, definitely not. There's going to be winners and losers and everything. It reminds me of Yellow. Remember the trucking name that we were looking at 2 years ago that went bankrupt? And everybody was using that as a reason to be bearish the market. Like Yellow is one of the largest logistics providers in the market. They're going under. And I don't even think you can pull the ticker up anymore on TradingView, but the ticker itself, it's too bad we can't do it. The ticker itself had been in a decline for 15 years. Like steady decline for 15 years straight. And people are like, oh my God, they're going bankrupt. This is bad for the market. I'm like, they've been going bankrupt. It just COVID just expedited the process. COVID did a lot of shedding of companies that were going to go bankrupt eventually anyway. And Yellow is part of it. Wolf is part of it. But from Wolf's bankruptcy comes opportunities elsewhere within the industry group. And we can actually look that up really quick. We can go and we can actually look up the top performers year to date, which I don't know if there's going to be a lot year to date, but we can look at the top performers. How about we do the last month in general. The top performers in SMH, AVGO, NVDA, Microchip, MU, TSM. These are generally larger cap stuff.
I was just looking at AVGO. It's getting close to all-time highs.
AVGO, Broadcom?
Yeah.
Yeah. Yeah, this is a trade that we took and then we failed to re-enter here. But yeah, I mean, like I said, I'm not interested in owning AVGO right here where it's at. I think there's other semiconductors that offer a more attractive setup. But once again, this is a $1 trillion semiconductor related company pressing back up into all-time highs. Like, how bearish can you be this industry group when you have these giants pressing back up, right? Like, more ammo to the fire here. AVGO, CoreWeave, AEVA. I mean, that right there, pop, pop, pop. Like, you got mega cap, large cap, small cap, all moving in tandem.
trying to look for other names, but
We can use other ones as well. We can use Sox. It doesn't have to be SMH. Sox is going to have a lot more holdings within it. Still, let's see, return here, still AVGO.
see.
So something that we've been talking about for a couple of weeks now is the pain trade, at least in my mind, is up. I think that there's still a lot of complacency in the market. I think there's still a lot of people that are not convinced that this could potentially break out to all-time highs. The news cycle is still super negative. We're seeing tariff-related stuff. By the way, every piece of tariff-related news that's come out over the last 2 weeks, 3 weeks has been discounted almost immediately, meaning price algos would dump for 5 minutes, and then 2 days later or a day later, or sometimes even intraday, price recovers. I think the threat of the tariff stuff is largely behind us, at least from a news cycle standpoint. But that doesn't necessarily change the public's perception. And so there's just so much pessimism right now, at least on my social media feeds and the people that I listen to talk about this stuff. Some of the biggest guys in the market, Paul Tudor Jones, et cetera, screaming that the markets are going to retest their April 7th lows because of tariff scares and stuff. And I don't see it. I think the pain trade's higher. I think a lot of people have that thought that we could potentially retest April 7th lows, and they don't want to, buy the top. And I'm not saying this is going to happen, but what happens if the NASDAQ is at 540 and breaking out into new all-time highs? Are you still going to be worried about the April 7th lows? At what point do you flip long? Are you going to be able to flip long at the all-time high pivot? Or are you still going to be the person that says there's no way this can happen because they've been saying that for 6 weeks and it's happening? I think that's the hard part about this is, trading with bias and opinion can generally convolute what you can literally see on the chart, which is an uptrend right now, whether or not people want to admit it. So the Qs right now, we're up after hours 0.06, officially closed down 0.44. NVIDIA, I believe, closed down on the day as well, if I'm not mistaken, 0.5%. It's up a little bit after hours. We'll see what the market wants to do here with NVIDIA. The last couple of earning events have been short-term positive, medium-term negative. I think January's earnings report, let's go ahead and turn earnings on the charts here. The February earnings, not great. We had a short-term pop up and then immediately sold off. And we had the November 24th, we had a short-term pop and immediate sell-off. So the last couple of earnings events have not been great from a price action standpoint in NVIDIA. We'll see if today bucks the trend. We're still stuck in this nasty range here that we've been in for almost an entire year. I was surprised to see Robinhood holding a lot of Bitcoin. Yeah, me too. Me too, but Robinhood has been one of the best trades we've had on the books since 2024. So continue to own it multiple times with size. It's been very good to us.
My hood position's been open for 141 days.
Oh yeah. Yeah, I still have positions that are expiring in June that I think we opened up in November of last year or December of last year, and they're doing great. They're doing great even with the pullback. There's just implied volatility stayed high the entire time, and taking profits on the way up is a great way to shield yourself from having to make difficult decisions on the way down. Just kind of ride the wave. And yeah, Hood's been one of the best trades we put on consistently since 2024. Not necessarily the biggest trade we put on, but consistently it's been a big winner for us. So I think the harder trade here is Coin. Coin's been a more difficult trade, which we have not put on a lot of positions at all, as you can just tell from the chart here. A lot choppier price action than MSTR, which I don't personally enjoy trading a whole lot because of the higher volatility and just having to worry about the news cycle overnight, whether or not Sailor is doing something stupid. I prefer to trade Hood or now IBIT. I like IBIT as well. If you're not looking to trade spot PTC, or if you're located outside of the United States, you can introduce a little bit of leverage. IBIT gives you an opportunity to introduce a little bit of leverage through options trades. So I like IBIT as a trading vehicle for Bitcoin.
I think there was some analysis done at MSTR. It also contains like a 80% premium over Bitcoin or something like that, just because of Sailor's involvement and just that volatility of him just saying something that might just kill MSTR, but Bitcoin would still go the opposite direction. It's just there's a correlation, but it's not super strong. Whereas IBIT follows Bitcoin perfectly, right?
Yeah, I mean, but there was like in the strong bull market where MSTR was going up, that was the reason why you wanted to own it, right? Because it was trading at a premium and it was outperforming Bitcoin by quite a lot. But now it's like, shout out Andrew Rocco or something on Twitter. I follow him and he's been all over MSTR for the last couple of trading sessions where he's like, MSTR is showing a lot of relative weakness, even though Bitcoin's breaking out here or continuing to go up. I'd be careful if you're still owning MSTR. And I don't know what the long-term price action is going to look like with MSTR, but I do know that MSTR is down like 15% and Bitcoin is at all-time highs. So like the relative weakness in MicroStrategy is notable, right? Like to us, that matters. You don't want to own an asset that's underperforming. Particularly, you don't want to own an asset that's underperforming, an asset it tracks. That's not good. You're essentially trading a leveraged product and it's moving against you. That's not good. So, yeah, I'm not a huge fan of trading MicroStrategy. I don't love it, particularly from an option standpoint. Super high implied volatility. I think it's easier to lose money than make money on that. Call me boring and old or whatever, and just give me HOOD. Give me some long-dated call options in HOOD, particularly as it looks to break out into all-time highs, and I'll sit back and wait 3 months and make 1,000%. I don't need it tomorrow. It's totally fine. All right, guys, we got about 3 minutes until NVIDIA earnings come out officially, I believe. If I'm not mistaken here, they report 420 up a little bit after hours. Go ahead and bring this down to the 1 minute and see what's going on here once again. No predictions on how the market takes this, but I do believe that as primary trends continue to press higher, particularly with tech and semiconductors leading, that there's a good chance that NVIDIA does well. We'll see.
I did not get filled on my little butterfly that we shared with the Discord, so I have no skin in this earnings game, unfortunately.
Do you have exposure through other semiconductors as a proxy or nothing?
Nothing
on
this one.
You were busy last week at a conference, so I know missed out on a couple of things. I think for anybody in there that didn't hear the speech earlier, I own NVIDIA. I also owned CoreWeave was my largest. It is still my largest position. CoreWeave is still my largest position. But I owned a significant number of the Junes. I scaled out of all of those. I don't hold anything anymore. And I scaled out of over time. I've scaled out of some of the Julys as well. So while CoreWeave is a free trade and I'm up big on it, NVIDIA is not free for me. I did roll some of the profits out from the CoreWeave and the AEVA trade into the NVIDIA, but I'm also risking capital here. I do have Q4 exposure, so I'm not necessarily going to freak out if the market dumps this tomorrow. I'll have a couple of weeks or months to make that decision on whether or not I want to cut NVIDIA here. But I do want to point out that I do have risk in this. It's not risk off, something that we preach inside of TTI, is to try to turn these trades risk off prior to an earnings event because we don't control what the market is going to do on these binary events. But one thing that makes me sleep a little better at night is knowing that there's about a 6% move priced in right now for the Friday contracts. And if you just shift click down really quick, 6%, we're still well above the upward sloping 2-day moving average. And if you shift click up 6%, we're right at the top of the range. So even on a bad response, if we're within the expected range, I would not count that as a total loss because I have 6 months of expiration still left on these contracts. And we're above an upward sloping 2-day moving average. And I know that primary trends tend to push price up over the long term. So I'm going to hopefully ride strength higher. We'll see.
Where does a CoreWeave trade rank for you? I guess as one of the better performers. Is it in your top 5?
Well, it's the best trade I've
put
on
this year. That
this
was an amazing call.
Yeah, it's the best trade I've put on this year, and I won't be surprised if it's the best trade I will put on this year. I don't think I'm going to be able to, because I mean, very rarely, we talk about this all the time, but very rarely do you nail the absolute breakout with size, and very, very quickly I added a lot of size into CoreWeave when I saw, I mean, because it's the same play as ARM. NVIDIA is reporting, I'm going to bring this down to the 1 minute. It was the same setup as ARM. We made a bunch of money on ARM in 2023, 2024, a lot. Yep. And I saw the similarities with CoreWeave, and so I sized in almost immediately. I mean, I didn't fucking wait at all. I doubt I'm going to be able to hit a trade bigger than CoreWeave this year. I don't think I will. And by the way, I still have exposure into January of 2026, and that's up 250% today. So it's like, it's already de-risked. I can sit here for another 7 or 8 months and just let CoreWeave do whatever it wants to do with no risk against my account capital. And I'll tell you something. Here's a secret. I'm not going to do shit. I'm gonna let CoreWeave continue to do whatever it wants to do, and we'll see. But I just those setups come, once or twice a year. I don't
Right. You're moving. You're buying a small cap that moves into a mid cap, and if it keeps going, it'll go into a large cap.
That was AEVA.
Those trades don't.
But AEVA was the exact same setup. We got them back to back, and we got QBTS. We got 3 1,000% trades in the same week. The difference is I didn't have the conviction to size up in AEVA, and I definitely did not have the conviction to size up into QBTS. Or I chose Rigetti, but QBTS, like the conviction wasn't there because they're higher risk, lower market cap. CoreWeave obviously a little bit more, or not CoreWeave, AEVA more difficult for me to rationalize higher size because, well, it was like a $200 million shit company when we bought it. So I was, I had a play in there, made some money. It was a good play, but CoreWeave was, I don't remember what the actual market cap was in CoreWeave when we opened it, but I mean, it was already a large cap. So those types of trades, once I realized like, hey, we have liquidity on the chain, lots of open interest. And then I'll tell you guys something right now. Part of the reason why I loved the CoreWeave trade is not only because the setup was damn near the same as ARM, it was the same fucking sentiment on Twitter as ARM. When I went long ARM, the largest accounts on Twitter were like, this is a scam. This is a Ponzi. The AI bubble is going to blow up. And I was like, these guys are fucking idiots. More often than not, I'm going long ARM. And we did it as a group. We nailed the fucking bottom with size. It was the best trade we put on during that 6-month corridor. CoreWeave was the same thing. I went on, I looked through the cash tag on Twitter, all the larger accounts. It's a Ponzi scheme. NVDA owns it. It's going to go to zero. This is bullshit. I was like, fuck, this is easy for me. Let's buy as much as I possibly can. And it worked out. So NVIDIA is slightly up after hours. I don't have the numbers in front of me. If somebody on Discord wants to post the earnings right now, feel free to post those. I would love it. Jensen normally gets on and speaks at some point, and NVIDIA makes moves off of what he talks about. But as of right now, we're up about 2.5% after hours.
I think the market's probably waiting to see what Jensen says, especially with respect to how many GPU sales they actually made in Saudi Arabia or in the Middle East.
Huge.
How that's going to impact, and whatever they're doing to skirt the rules that the Trump administration, Biden administration put in place to sell any of their GPUs in China.
There was just a news headline out though that NVIDIA is coming out with new chips that are compliant with the restrictions for China. So they're going to be able to sell something to China. I don't know if that's significantly going to push revenue in their favor or not. I don't know if China's going to be willing to buy them. I have no idea. But the news headline said that they essentially have a chip that's China compliant and they will sell it to China. I think.
Yeah, I heard something this morning. They said that. Yeah, I heard something this morning that said that they just made chips that were compliant according to the Biden administration, that they had to just pull it all back because the Trump administration said it's not okay anymore.
Perfect. That's the hard part right now. Like I'm not a macro trader at all. I'm not somebody that's going to sit here and I'm not going to try to like predict macro policy or what the Fed's going to do. A lot of these jokers, like, they make their living off of engagement because they put these bold predictions out. It doesn't matter if they're right or wrong. I have no fucking idea what's going to happen. What I do know, though, is the market doesn't like indecision. We've said that a million times. The market doesn't necessarily hate bad news. The market hates indecision. If the market expects bad news, it immediately prices it in and things tend to move a little bit cleaner than what you expect. That's part of the reason why long-term bears are always befuddled when the market goes up off bad news. Like, how the fuck can this happen? Because the market already had like an inkling that it was going to happen. They price it in and then they move on with their life. Or, market is a forward discounting mechanism, 6 to 12 months out, argue however long you want. It's the indecision the market doesn't like. And so like you just referenced with the Biden and Trump administration sparring back and forth on what's real, what's not, regulation, blah, blah, blah. That's what causes the market to freak the fuck out. That's what causes like the outlandish moves. So if you're bearish, you want the market to be coasting off of this chaos, not necessarily pricing in bad news. Because once it has an idea that the bad news is coming, it immediately starts pricing it in. And once it starts pricing it in, the response is generally muted. So, all right, let's see here. Somebody posted the NVIDIA earnings. Looks like earnings per share beat by 28%, revenue beat by 2%, EPS up 57% year over year. Revenue up 69% year over year. EPS up 8% quarter over quarter. Revenue up 12% quarter over quarter. So beat across the board. I think it comes down to, as Mike said, it comes down to what Jensen says here and the guidance that they put forward in terms of what they got out of the Saudi deal and what they're going to get out potentially of the China regulation stuff as of right now. After hours NVIDIA up 3.15% up into multi-month highs. I think this right here would be a win. If we just closed right here, this would be pretty goddamn good for the market. The market's looking to clear its overhead supply here in this range that we've fought through over the last couple of days as well. Data center sales jumps 73%. That's crazy.
That's pretty good.
Yeah. Well, there's a lot. There's people on Twitter that are a lot smarter than me when it comes to predicting like the next leg of the AI bubble and stuff like that. And there were people at the beginning of the year like, listen, semiconductors are not the trade if you're looking for outperformance anymore, which you can argue is right or wrong. We've made great money in semis, but their argument was like the semi bubble or the AI bubble, is going to mature to things that need semiconductors, not just semiconductors. And I think data centers were part of that. So like you can tell like the industry group rotates throughout the bubble. It pulls everything up, but that's going to be like the focus point. If that's the case, then there's some alpha. Go find the data center providers.
And the interesting thing is the NVIDIA GPUs are mainly in high demand for training of these models. GPU sales in data center implies that the models are getting so big that the actual inference is requiring these GPUs in order to have decent performance for their users. So that's a different area that NVIDIA is selling into at this point.
I'm shamelessly under educated in the semiconductor space. I don't know. I get basically everything I get is from news headlines or what you guys talk about inside of the Discord. That's what I know. It's not something that I'm particularly interested in other than the end product, what the semiconductors are able to do. So when you tell me things like this, it's funny because I'm marrying the price to what you're saying, and I'm like, yeah, it makes sense. Because like with that thought process, it's should we be looking for relative strength and outperformance in a specific area of the AI bubble trade, like you said, like maybe architectural type of companies within this AI bubble. What's the next phase? Cool thing is, as technical traders, we don't need to predict. Just scan for it and find the relative strength. Eventually, the narrative is going to come out and say that was the best way. We're going to see it through price before anything else.
Yeah, that's a paradigm shift here for NVIDIA. So I'm curious to see what Jensen says here, or whatever the headlines are that come out of it tomorrow, because we're not going to dial into that call.
Oh yeah, no, I'm definitely not. We're going to hop off here in probably the next 5 minutes. It's interesting to see Bitcoin not necessarily respond positively to this. We're up marginally. I would have expected with a positive pop in NVIDIA and the NASDAQ, at least in the short term. I don't know where NVIDIA is going to close tonight. I don't know if Jensen comes out and says, blows the whole thing up, but we're marginally up right now after hours. Bitcoin not really budging at all. So we were just talking about that about 30 minutes ago. There has been a historical correlation between Bitcoin and the NASDAQ, but we have seen that break over the last probably 5 months, going back to like December or January. The positive correlation, which was very highly positive in Bitcoin and NASDAQ, broke. And as a matter of fact, the February to April lull down saw Bitcoin go sideways instead of down. So a lot of outperformance in BTC. And here we go, where BTC is not responding at all to the positive move in NVIDIA after hours. So who knows? Maybe that correlation is gone for the time being. There we go. We got a full NVIDIA earnings rundown. Let me go ahead and just pull this over so you guys can see it. Give me 1 second here. Anybody watching the stream, if you can see this, we got there's quite a few misses here, at least in terms of expectations. So I would be very Careful buying anything here after hours until Jensen gets on the mic and starts talking about this stuff. But there's a lot of missed. Everything looks good, but it's just missed from their targets. We'll see. NASDAQ is up right now, 0.36%, which puts us right back in the middle of the range where we were earlier today. And it looks like NVIDIA is starting to build a base here. Slightly up after hours, but once again, we're waiting for the guidance from Jensen to come out. Guys, we're going to hop off here in a couple of minutes. If there's any questions you guys want answered, feel free to ask them over on the YouTube chat. If you're on Twitter, I can't see what you're saying. I apologize because I didn't pull it up. Mike, is there anything you want to talk through before we call this session here? Anything we didn't cover? It's been a great 6 weeks to be long tech. I'll tell you that. It's been fantastic. I don't think that's going to end in the coming weeks or months. I think tech. I think my ending statement here before we hop off, and I'll give you a sec, is I think tech is going to continue to outperform, and I think tech has a clear runway to all-time highs. And I think that if tech breaks out to all-time highs, the NASDAQ is going to follow. And I think if the NASDAQ follows, the S&P 500 is going to follow. And I think if the S&P 500 follows, there's going to be a whole group of traders that are going to be really fucking mad that they missed buying over the last 6 weeks. And they're going to be forced to buy the all-time high breakout. I absolutely think it's in the cards, and I'll prove it to you really quick. If we look at XLK against the S&P 500, which is something that we've looked at a lot inside of TTI, you can see here, we bounced off of the exact 2000 dot-com bubble highs back in 2024. There's been a period of underperformance in tech against the broader market. The tech sector, peaked in June on an absolute basis, but it also peaked on a relative basis. It's been in a drawdown against the S&P 500 since. But we bounced off of the 200-week moving average for the second time here. The last time we were down here was the end of 2022, beginning of 2023, which led to a huge outperformance of about a year and a half, almost 2-year run. We're bouncing again. What happens if we break out on a relative basis against the 2000 highs? I think the bigger issue is if you're not positioned for it, you're going to miss out on arguably the best trade that you could possibly put on in this market, which is tech. Semis did the same thing, right? Semis came up, retested the 2000 highs back at the end of the last bull cycle in November of 2021. We underperformed all the way to October of 2022. In the October 2022 rally, stopped at the 2000 highs and then outperformed by an additional nearly 50% against the broader market over the course of the next year. I think that's the pain trade. You're not positioned properly. And also shout out semiconductors bouncing off the 200-week moving average, same thing as tech. I think that's where a majority of the alpha is going to be. If tech clears overhead supply into all-time highs, I think it breaks out on an absolute basis. I think it breaks out on a relative basis. And I think everybody that is complaining right now about tariffs is going to look like a fucking idiot. That's where I'm planting my flag, and that's why I have exposure in the sector. Mike, any parting words?
You can't follow that up. So no.
I mean, it makes sense to me. If I'm wrong, I lose a couple bucks. If I'm right, I'm going to make a lot of money, and those are the odds that I really like. Right? I'm levered or not levered long, but I'm long tech, and I have conviction, and I'm going to sit here and either be right or wrong. I guess so far, not to say short term is going to necessarily roll into long term, but short term I've been right. So we'll see if that continues. All right, doesn't look like we have any questions over on YouTube that are coming through right now. So we have a record 300 people watching across all the platforms. So shout out to you guys for watching. Thanks so much. NVIDIA earnings out as of right now. After hours, NVIDIA is slightly up. We'll see what Jensen has to say. The Qs are up. The tech sector is up. Things look okay right now. I don't want to jinx it, but we'll see where we're at. If you're inside of TTI, I will be on the Market Research Portal chat room later tonight after my kid goes to sleep. If you have any questions regarding anything we went through today, feel free to ask over there, and I'll get back to you as soon as my kid's asleep. If you're not inside of TTI, check out the newsletter. It's linked in the description below. All the information to join our services winner if you're ready are linked in the newsletter. Okay? Thanks so much, Mike. Thank you for your time. It's been a blast. It was fun, and hopefully this pop in